Hi there, welcome to Kneppy Invest and welcome to another technical update video. September 22, 2024. Currently time is 10:07 a.m. and just by looking at the XGO right now, beautiful looking chart. However, I do have a few reservations, a few questions based off where the XGO is right now in regards to a long-term trading channel it has traded within over the past 15 years. I discussed this in the Friday ASX daily rundown video, and I discussed this again today. But otherwise, XGO is just coming off all-time highs. There was a little bit of selling on the Friday session, so it is at all-time highs. Dow Jones is near all-time highs, I believe. Nasdaq maybe just a little bit off. So we're riding high. We're feeling good as investors, but maybe we're feeling a little bit too good, and possibly there is a bit of downside in the future. Just possible. Won't say it's an absolute certainty because we're talking about the future and the future has not been written yet. Or maybe our perception of time is all wrong and maybe the future has been written and we just don't know it yet. Who knows? Anyway, so I do have some questions. And because I do have some questions, and I think the market is getting a little bit toppish, I have taken a little bit of profits, but not a lot. So I haven't gone completely to cash or anything like that, but I have just built up my cash balance a little bit. And the other thing I want to discuss in today's video is whether the banks are in a bubble. Now, there was a comment from James D. died in 1955 about Westpac. So I thought, why not have a look at Westpac chart? And I was a little bit surprised how much Westpac share price has increased in 2024. I was a little bit shocked. And then I had a look at the PE ratio and went, ooh. Anyway, so I do have a question. Are the banks in Australia in a bubble? And if that bubble bursts, because we're talking about 4 of the 6 biggest companies on the ASX, so if that potential bubble bursts, then possibly we'll see a bit of downside when it comes to the XJO and the other Australian indices, except the XTech indice, the all technology, because banks aren't in that. Anyway, so I suppose it depends on which indice you're talking about. Okay, so the agenda for today's video. We'll look at the indices, and we're all feeling pretty good now as equity investors. We also have a look at commodities, and if you're bull in gold, you're probably feeling pretty good as well. I have no idea how the other commodities have done, but I do know gold is doing really well. Then we'll have a look at Bitcoin, Ethereum, bonds, nice little rally in bonds or bond yields since the Fed dropped interest rates by 50 basis points. That was interesting. And then we'll have a look at individual companies' charts, about 10 or 11, if I remember correctly. I think it might be 11. I was aiming for 10, and then I decided to include Westpac because of James Deed died in 1955. Okay, so let's get stuck into it. And let's have a look at the Australian indices. And let's start with the weekly chart. Now, I think I've discussed this many, many times. The XGO has been trading in this upwards channel for 15 years, going all the way back to the end of the GFC. And only twice has the XGO gone above or below this trading channel. The first time it went either above or below was during the COVID-19 financial panic. So I don't really consider that sort of a break in this trading channel because that was a black swan event. It was a short-lived event as well, and it quickly went back into the trading channel. Then the XGO went up for 11 months in a row, and then in August 2021, it went above the top of the trading range for a brief moment. And when I say brief moment, I don't mean a few seconds. In terms of 15-year period, we're talking about maybe a few days. And then we did see a fair bit of weakness in the XGO after that. Fell from 7,600 all the way back down to 6,400. So again, the top of the trading channel acted as a resistance, and then we did see a bit of weakness in the market. Funnily enough, it hit the top of the trading channel the week before COVID-19 financial panic. That was actually one of the reasons I decided to sell a few of my positions, because it was near the top of the trading channel, and I thought the market was overvalued. And right now, as we speak, well, not today because there's no trading, but if you look at the weekly chart, you'll notice the XGO is right on the trading channel, the top of the trading channel. And in fact, if you look at the daily chart, hone in a little bit closer, you'll notice that during Friday's session, it did pull above the top of the trading channel for a period of the day and then pulled back with a little bit of selling. And I would say that people know maybe it's at the top of the trading channel. I would say there's quite a few technical analysis or chartists who have this same channel, and it's not surprising to see a little bit of selling. So this is one of the reasons why I'm a little bit, I wouldn't say bearish, but I'm a little bit be more careful when it comes to seeing a possible buy, seeing a technical buy signal, and just buying it. So there is a potential that I might not add to my portfolio over the next few weeks if we see a little bit of weakness in the market. Now, there's another possibility here that the XGO will get a go above the top of the trading range and stay above the top of the trading range. And this means the top of the trading range becomes support, and then we develop a new trading range. There's that possibility as well, but I'd like to see that happen before I say that is going to happen, of course, because it's the future. The future has not been written, unless you're from the future and you've come back and then it has been written. Anyway, XSO, of course, always been less bullish when it comes to the XSO, although it's had a few good weeks. It's rallied hard from 2,860 up to 3,054, but still well off its all-time highs. And not only well off its all-time highs, it's well off the previous highs we have seen in 2024. So we're talking about April, May, July, and August. The XSO was actually higher than it is now. Possible more room to run for this particular index because it's full of smaller companies, and the XGO is bigger companies, including many of the major banks. And again, if we do have a bit of correction in the banks, that will see the XGO pull back, and that probably won't affect the small ordinaries. So who knows what's going to happen with the small ordinaries, but definitely less bullish, not at all-time highs, in fact, well off the all-time highs that were set back in 2007. And just by looking at this particular daily chart, there's actually no trend. It's going sideways. I'd want to see the XSO get above about 3,130 before I get a little bit more excited. Okay, so that's the Australian indices. Let's turn our attention to United States. Start off with the Nasdaq. And funny enough, so I did put these two lines, and this was like a downtrend line, and this was an uptrend line because we had a lower high, which is sort of the start of the definition of a downtrend. We also had a higher low, which is like a definition of an uptrend. But we had those in between each other. So lower high, higher low, which means there's no real trend. So what I thought is whatever breaks first, that would mean either positive or negative. So if the Nasdaq broke the downtrend line which is the downward sloping line here, that would be positive. If it broke the uptrend line, that would be negative. And it did break the uptrend line on the Thursday session. So probably a little bit more bullish. I was sort of neutral before that, but this looks pretty good. And the Nasdaq is right on the highs it saw back in middle of August, 22nd of August, which is not technically the middle of August. Anyway, still a little bit off the all-time highs, which was reached back in the middle of July, 11th of July. I'd like to see that being broken. That would be a bullish sign, but not quite as bullish as the Dow Jones. So let's have a look at the Dow Jones right now. So a lot more bullish about this one. It is at all-time highs and nothing to really complain about when it comes to the Dow Jones industrial average. It looks pretty good. What about the Russell 2000? Any complaints here? It did drop 1.1% on Friday. That means a little bit of weakness in the small caps, which could translate to the Australian markets on Monday, which is tomorrow. But anyway, and if you do have a quick look at this, and this is the first time I've looked at it, I can see why it might have pulled back because it is at a fairly important level, a zone, in fact. What I might do is I might just put a little triangle here. So there's a bit of resistance in this area here because you can see back in late July, it struggled to get above this zone, pulled back. And then in late August, it moved into this zone for a very, very brief period and then pulled back. And now it's back into this level and it's at the bottom of this purple zone. So maybe this is another pullback before we see some support in the in the long-term moving average channel, which is acting as a support level for the Russell 2000, going back to about April. So it's moved into that zone 4 times, and then we've seen the Russell 2000 go forward. So it is bullish in the longer term or the medium term, but I need to see it get above this purple zone for me to be even more bullish for the Russell 2000. But overall, it looks pretty good, better than the excess though anyway. Now let's turn our attention to international indices, starting with the Nikkei. And yeah, the Nikkei, after that big down period back in early August, it has rebounded nicely, but still a fair bit of volatility in the Nikkei at this point in time. And I think the uptrend that we did see for this particular index going back a while, going back to the start of 2023, I think there is argument that that's coming to an end. Maybe we're going to see a period where the Nikkei goes sideways and this volatility is going to wash out. Maybe that's going to happen. But at this point in time, I think the uptrend is at an end. What about the Hang Seng, which has been in a downtrend for a while? Oh, this is starting to look a little bit more interesting. So there's the downtrend line. It hit the downtrend line back in May and pulled back. It's getting very close to that line now. If it breaks that, that will be fairly good for the Hang Seng. So looking a little bit better now than it did a week ago because it had 5 up days in a row. Yep, 5 days in a row. So the weekly chart for the Hang Seng probably looks pretty good. Yeah, how much did it rise? It rose 5% for the week. Let's have a look at the DAX, and then we'll have a look at the FTSE. DAX has pulled back from the all-time high on the Thursday session. Still looks pretty good. Wouldn't be surprised to see this move sideways as well. I think the run is coming to an end, and we've seen the highs becoming less and less interesting. So the from high to high is sort of getting less. The distance between each successive high is becoming lower and lower, if that makes sense. In fact, the most previous high was just above the high before that. Anyway, so it does look like it's trying to roll, maybe not roll over, but maybe moving into a consolidation period. The FTSE, it's sort of boring to see this one. Not much action going on, sort of going sideways, like the DAX. This would have to get to about 8,500 for me to be interested in that. Okay, so that's the indices around the world, focusing mostly on Australia and the United States. Now let's turn our attention to gold, not gold, commodities. And we'll start off with gold because this is looking pretty good. We've had another good day for gold, up 1.38% on the Friday session, and this is an absolutely stunning chart. This is a great chart. Now, I do have 2 gold positions, and I have been thinking about adding another one because the chart looks so good. Did I include a gold company in my... I was thinking of including a gold company. I did not. No, I did. So I was going through the gold charts, and I was trying to pick, which one looks so technically interesting, and there was quite a few. So I thought I'd come up with one that looks more interesting now than it has previously. So wait for that towards the end of the video. So definitely gold looks pretty good. And in fact, it had a few good weeks in a row. Two good weeks in a row, up 3.22% last week, up another 1.7% this week. So no complaints about gold. And I'd love to hear if you do have a complaint about gold. If you don't like this chart, I'd love to know. Silver should look maybe not as good, but should look good. It is starting to, or trying to move into an uptrend, but it does have a little bit of resistance. And that resistance is these old highs back in May and July. But I think this one, if gold keeps rising, silver will keep on rising. And I think because this chart doesn't look as good, there could be better opportunities in the silver sector. Maybe. Okay, iron ore. It remains above $90. That's important. But this is that daily chart. This looks of no interest to me. The very fact that we did see a fair bit of weakness at the start of September, and since then the price of iron ore has just gone sideways, tells me that there could be further weakness. Now, it doesn't absolutely mean that's going to happen, but this is sort of like when you see the share price of something going up, or the price of something going up, and then you see a period of consolidation, that's actually usually a good sign. It's taking a breather. So on the flip side, maybe iron ore is taking a breather before we see more downside. Now, that's interesting because I have also included an iron ore company in today's video. No, I have not. I'm going to do that right now. I have talked about me and this company for a little bit, and I will discuss Fenix, because I mentioned if the share price falls below $24 or 24 cents, I will become interested in this company. Anyway, so that's, what do you call that? Iron ore. What else is of interest here? Uranium. Oh, it's had a good day. Up 3.4% on Friday. And now, does not mean the downtrend has come to an end, but I would expect, depending on when the price of uranium rallied, that uranium companies could have a nice day on a Monday. But if you look at this broadly, iron ore is actually in a downtrend. So this is spot physical uranium. Oil, just above $70. Nice little rebound off a support level. Will this continue? It seems like it's maybe hit a resistance, which is the shorter term moving average channel. Now, I could envisage oil falling a little bit from here, and if it falls below that support level, that would be a fairly bearish sign. So not very positive about oil right now. And do I have a position? I have one position in an oil company, and the only reason I have that position is I think that company is dirt cheap. That's Brookside Energy. Small company, but I think it's possibly dirt cheap. The reason I say possibly is because if they achieve their goals, it is cheap. But the question I have, will they achieve their goals? Natural gas, this is your E-mini natural gas, and I don't have interest here. Possible start of an uptrend, but I'll just say possible at this point. Lithium, oh, it did actually rally a little bit, but still in a downtrend, so we can move on. Copper, want to see some nice action. Oh, copper is starting to look a little bit more interesting. Is there? I think there is an argument that copper is moving into an uptrend. We have seen a higher low, and we have seen the previous high overtaken as well, which is this little sort of rounding action here back in late August, early September. And also, iron ore has moved up and above a resistance level at $4.30. So copper is starting to look much better at this point in time. I'd love to see it continue on its upward trajectory to be as bullish as I have been in the past, particularly back in March, April, and May of this year. I have one copper company, that is Hillgrove Resources, and I don't think this company, funny enough, the code for copper here is HG1, and Hillgrove is HGO. And I don't believe Hillgrove is, it's sort of rallying in the last bit. So definitely the Hillgrove Resources chart looks pretty negative, but if we do see copper going to run, this company could be considered cheap as well. Coal, yep, still going sideways. I have, little interest in coal at this point in time. I need to see a bit of a upward movement, a bit of a trend, upward trend in coal before I could become excited. We'll go through the rest of the commodities pretty quick, and we'll finish on Palladium. So tin. No, I don't think there's any trend here yet. Fairly similar than which one was it? Oh, the Nasdaq. So we had a lower high, but we've also seen a higher low. So no real trend at this point in time. And at nickel, I need a line chart for this. Nickel probably has found a bottom. Fairly rapid decrease in the price of nickel. It went to a low towards the end of July, and I think it has stabilized. So definitely a bottom, maybe not definitely, probably can't say that, but it looks like maybe a bottom for nickel. Now let's go back to the candles and let's finish with Palladium, because Palladium looked interesting this time last week. So has it remained looking pretty good? Okay, possibly. So it rallied above that resistance level or support, resistance level on a Tuesday session, and then it's pulled back. So this could have been perceived as a false breakout for Palladium, but Palladium definitely looks better. I'd like to see this resistance level being broken, and that would need a little bit of time, I think. A little bit of time, but Palladium definitely looks better than it has for a while. Okay, let's have a look at, not cocoa, we'll have a look at Bitcoin and Ethereum. Bitcoin is now 63,200, and I'm not enthused about Bitcoin right now, or this chart anyway. Not enthused. We have seen a few lower highs. That's a little bit concerning. And even now, it looks like this little rally in Bitcoin is sort of topping out. which would mean we've seen another lower high. Now, the good thing is we're not seeing lower lows as well. So not a distinct downtrend in Bitcoin, but I'd like to see Bitcoin get above about $66,000. But, Bitcoin could go either way. And Ethereum, much bearish, more bearish when it comes to Ethereum, and this should explain why. Maybe 2,200 is a bottom, a support level for Ethereum. Maybe that is the bottom, but a little bit less, well, a little bit more bearish when it comes to Ethereum. Now let's turn our attention to bonds. I just noticed bonds, US 30 years, have gone a little rally the last 4 trading days. And that does not mean the downtrend has come to an end. It's a nice little rally. It could be sort of a buy the dip situation for bonds. And we saw the same sort of thing back in August, early August. There was a nice little rally coming off that bit of a dip in the market back then. And you can see that rally lasted 3 days and then petered out and fall. Another nice little rally back in late August that petered out and continued to fall. And this is a few lower highs and lower lows. So definitely the 30-year going bonds are in the downtrend, even though it has had a good week. In fact, if you look at the weekly chart, probably had a pretty good week, up 2.64%. And that would mean the TLT ETF has had a little bit of a dip, which means this would be the buy the dip situation, TLT ETF. And currency, I want to see the US Australian dollar rally. Actually, don't mind this one. This is the daily chart. Don't mind this chart from the Australian dollar versus the US dollar. It's sort of the chart I would like. If we didn't have this little rally back in December last year, so if that rally petered out at, say, 66 cents, I would like this even more. But the Australian dollar is starting to look a little bit interesting in the shorter term. So please, Australian dollar, rally to $1. Rally to $1.50 so I can have a nice exchange of money. Yes, I'm being very selfish. Yes. Okay, so that's the end of this part of the video, looking at indices, commodities, Bitcoin, and also bonds. Now let's turn attention to individual companies' charts, starting off with James Dean, that died in 1955. Not really a recommendation or a suggestion. It is a question. He's got a question mark there and then 2 smiley for crying happy faces. How much higher can Westpac go? And this is the question for many of the banks. So let's turn our attention to Westpac. And I was shocked to see this chart. That is a pretty awesome looking chart. Share price broke out really towards the end of 2023, so 2024. You could have bought on that breakout at about $22. And the share price has increased 50%. Yes, the share price of Westpac increased 50%, even though the financial performance of the company has gone backwards, I think. That's true for most of the banks. Share price of the banks have rallied like this. The financial performance has gone backwards. And if you look at the PE ratio or the price to book of any of the banks, they are excessively high. So for instance, let's have a look. I've done this with Commonwealth Bank. Let's have a look at Westpac. Why not? I don't think this is as expensive as Commonwealth Bank, but what I'm going to do is just have a look at this company's historical PE ratio, and then we'll have a look at the historical price to book ratio. And so right now it's at 17. Really, 17? So according to TradingView, it's at 18.6. And based off this, it's not at excessive highs. Now, from 2014 all the way through to the COVID-19 financial panic, the high in Westpac's PE was 18, and that was in July 2022 as we came out of the COVID-19. Before the COVID-19, the high in the PE of this company was 15.9. That makes more sense. And the low was around 10, and that makes sense. And that is a rule I do have. If I do see the banks getting to a PE ratio of like 10 or even below 10, I do become interested. And it happened back in, when was that? October of last year. So 1 year ago, PE ratio of this company was 10.5. So I would be more interested in this company then. But now it's at 18, and historically, PE ratio of this company doesn't get much higher than this. It did for a while during 2021, but there was a lot of, I think that was a period, the reason why the PE ratio of that company, or Westpac, was high then was because of suppressed earnings. The earnings were lower because of COVID-19. So I'd probably look at the PE ratio back then with a grain of salt, but otherwise, the PE ratio of this bank and other banks are at high levels, historically high levels. and that does not bode well for the future returns of this company. The other one I want to look at is price to book. I think this is probably even more alarming. I'm just guessing now, because I know Commonwealth Bank, it is alarming. Okay, work. Hello, what's happening here? For some reason, it's all gone to crap. It won't be. I don't know what's happening. I don't know. Why is it? Oh, brother, I'm sorry. I easily get flustered. Apparently that's a sign of ADHD. Anyway, let's have a look at the price to book of Westpac. Well, it's not that bad. It's only 1.6. So this is nowhere near as bad as I thought it was going to be. It's not like Commonwealth Bank, but it is definitely rising. So the rise in the share price of Westpac is just multiple expansion. It's not financial expansion. And ideally, you want to see the share price of a company rise because of financial expansion. Ideally, it's financial expansion and multiple expansion. But what's happening with Westpac and probably other banks is financial expansion. Now, interesting enough, there was a downtrend in the price to book of this company all the way through to the start of this year. So the price to book was dropping, fell all the way down to 1, which is sort of a normal level for a bank, but nowhere near as high as Commonwealth Bank. Let's have a look at Commonwealth Bank. This company now has a P/E ratio of 25. That's ridiculous. That's insanity. So, yeah, 25.7. Let's have a look at the history for Commonwealth Bank. Over the past 10 years, it's never been higher than this, even during that period in 2021 when the earnings of the banks were suppressed because of COVID-19. P/E ratio of this company now is higher than that period. And if we have a look at the price to book, and I did a video on this, it was 3. It's probably like 3.2. 3.3. It's never been higher. And the last time it got above 3 was back in 2014, and then the share price didn't get back up to those levels for about 7 years. So this is screaming to me bubble. Commonwealth Bank. Westpac, not so much. But it's interesting that Westpac share price has increased 50%. So if you go back to October last year, the share price was hovering around $20, $21. In fact, you could argue that's based off the PE, 10, was looking okay value, maybe cheap, but now it's not. Anyway, how far can the share price go? It could go even further. The market can remain irrational for a long time, and that's what's happening with Westpac. I would love to talk to someone who is buying or wants to buy the banks at this point in time, particularly CBA. Why do you want to buy the banks? The future isn't that rosy. We're not going to see massive growth in these companies to justify the current valuation, particularly CBA. I'd just like to know why. Is it just safety? I don't know. I have no idea. So the answer to James Dean, how much higher can Westpac go? It could go much higher than it is. Yeah, it could double from here. If it did double, I'd be shorting. Yeah, it's hard to short because shorting is hard because we just don't know how long or how much further it has to rise. It could keep on going. And just based off the chart, if I saw this chart without knowing the company, I would like this chart. I would think it's got a little bit ahead of itself, and I would expect a little bit of a dip because the share price has really gone on a run since August from $27 to $33. So it does need a bit of a breather and doesn't need a little bit of pullback. At least the share price going sideways. So in that regard, I don't think I'd buy it just now, but overall, the chart looks pretty good. Yeah, so chart looks good, but let's move on to the next one. So we're going from a company with a fairly big market cap, one of the biggest companies on the ASX, to a company with a fairly small market cap called Wrkr. Well, 84 market cap according to TradingView. So why have I included Wrkr in today's video? Actually, there's 2 reasons. The share price action looks pretty good. Share price is low, 4.9 cents. It was as low as 1.8 cents back in June of last year. So share price has gone a bit of a run, but we have seen share price rally nicely the last month. But the thing that really stood out to me was the volume. We have seen a significant increase in volume in the past month and a week. Since the middle of August, the volume has just exploded. So what's causing this interest in this company? I don't know. I have looked at this company a few times in the past. Now, I shouldn't be doing this because technical analysis just should be at the chart. But something has increased the interest in this company. And I don't know what it is. It could be the financial results. If we go back to the most recent Appendix 4C, I do like to have a look at this. I'm pretty sure this company is close to being operating cash flow positive or is cash flow positive. So it could be something as simple as that. So they are operating cash flow positive, increasing receipts, increasing revenue. So the market is liking this company at this point in time. And the charts and the volume, what is causing that increase in volume? Is it like institution becoming interested in this company? Maybe a small cap fund manager is becoming interested in Wrkr. Another thing you can do is look at change of directors' interests. So the directors buying up, management buying up, nature of change, acquisition of ordinary shares under workers' share purchase plan. Okay, that's not interesting. And vesting of staff incentives, not sure. Substantial shareholder notice, that was in 27th of August. Let's see if anything happened here. Decrease, so someone sold. Oh, no. Decrease in relevant interest arising from dilution from issue of ordinary shares under workers' placement and conversion of convertible notes. So nothing of interest here to really explain to me what the share price is rallying. So maybe it's just the company's financials are looking pretty good to the overall market, but the chart is intriguing. Now to James Hardie. We saw a 2-day rally in James Hardie. This does look interesting now. So share price rose 5% on Thursday and a further 2.6% on Friday. And the share price with the rally on Friday actually did break out. Share price got to a 4-month high. I would prefer it if the share price didn't rally back in the start of this year and went to a $63 high. I would love if that didn't happen, because if this was a longer term high, I'd be a little bit more interested in James Hardie. Otherwise, I don't. P ratio 38, 1.8. Interesting, potentially interesting chart. Ansell, this is one I did take a position in back in April on a breakout that failed fairly quickly. And I just remained patient. So this is actually a nice tale, a nice story, maybe a lesson of remaining patient. I could have sold out of this company for a small loss, and I could have sold out at that small loss for a few months. So I bought in April, and the share price didn't really rally from my buy-in until July. So it's on about a 3-month period when I probably should have sold out because I wasn't doing anything. But I thought, just remain patient. Just remain patient. We had this breakout, this moving average cross in April, so just after I bought. And I wasn't really following it all that much, but I was hoping the share price didn't fall much below. It would have been probably around about $24. It got close, but then when the share price started to get to above my buying price, I started to go, this is starting to look a little bit more interesting. And then the company released something, would have been the financial results on 20th of August, and you can see what happened after that. So this is, and look at the volume as well. Look at really good volume coming in. Not only that, the volume on Friday session was pretty high, but a lot of companies had pretty high volume on Friday. There's probably some reason behind that. Maybe options or something like that. I don't know. But I noticed a lot of companies had unusual volume on Friday. I had like 80 hits. Usually get 20 hits or so. I had 80 hits for unusual volume. And then a lot of these companies were fairly big, including Westpac. I believe Westpac had unusual volume on that session. Yeah, unusual volume. Yeah, higher than normal volume. Anyway, so Ansell looks pretty good, but I did not have a look at their financial results. The market liked it. And one of the reasons why is because I might talk myself into selling my position, because I would say this company is expensive. So, for instance, price earnings ratio is 35. And but I just wanted to sort of separate my fundamental analysis from my technical analysis when it comes to some companies, because the chart looks pretty good, but fundamentally, I don't know. Cochlear, on the flip side, so Ansell looks pretty good. Cochlear has had a moving average crossover, a bad one. And this chart does look negative. And the negative really started when they released their results. So results matter. I'm not sure if the results or it's a forward-looking any sort of outlook that the market became nervous. You could have sold it on that day when the share price fell 7%, because since then the share price has kept on falling. And in my opinion, that is sort of a catalyst. Have a look at how the share price has performed when a company releases results. And when you do see the share price pull back, that can be a negative sign. The next day, the share price actually fell through after they released the results. Share price fell through a support level, another negative sign. And since then, the share price has fallen quite a bit, maybe 10%. Yeah, that's not a lot. It's fallen another 10%. And also, subtle increase in volume. It's a very subtle, but it's definitely there. So this is definitely negative movement in Cochlear share price. And it's gone from a nice uptrend to a downtrend. On the flip side of a developing downtrend, possible developing uptrend when it comes to EBOS Group. And also, not only that, we've also had a moving average crossover. This is a positive one. We also see some really good volume coming in the last few days. The reason why this one popped on my list is because the share price moved above $35, and that's a fairly important level. I'm going to put a line right there. Right there. So if you go all the way back to September 2023, this has been the important level for EBOS or in terms of the share price breaking out. And the reason I say that is you can see the share price having lots of trouble getting above this level, September 2023, and then just day after day, after day after day, from November all the way through to March, and the share price just couldn't break through this level. And you can see a lot of shadows above the main body. So a lot of selling when the share price got to about $35. Share price went on a bit of a rally, got to $35.50, then pulled back. In the last 3 trading days, we have seen the share price rally. Now, I won't say this, I won't call it, this is not a breakout just yet. Now, in the next few days, if we see a bit of selling and the share price falls back below $35, it will just show you, again, that this level is important for EBOS. And if the share price eventually breaks above $35, that could be a buying or a trade for this company. Aurizon. Oh, this is an interesting one because this is another position I hold, and this is, I was talking about Ansell remaining patient. This is a patient position. It moved into my purple box. This is my buying box for ANZ, or not ANZ, Aurizon Holdings. And the reason this is my buy position for Aurizon is just history. If you go all the way back to 2016, whenever the share price gets into this level, that is a buying opportunity. Now, I don't think Aurizon is going to be significantly affected financially. I don't think you're going to see a significant drop in their profits, revenue, that sort of thing. And I just think this was a good buying opportunity because there's a possibility, just a possibility, because you get a nice dividend yield. According to TradingView, it's 6.23%. But there's a possibility I could get that yield plus a nice 30% capital return from this company within the next 6 months to a year. I wouldn't be surprised to see the share. So I bought 330. So I wouldn't be surprised to see the share price get above, say, $4.50, $5. So if it gets to $5, that's a nice 50% return. But definitely above $4 is sort of my aim, above $4. And if that does happen, we're talking about a nice little 20% gain. It's close to 20%, yeah. 33, 66, 396. So 20% gain if it gets above $4, which I think it can happen. But I need to give this trade enough time to breathe, enough time to get to that point, because the last time I moved into this zone for an extended period of time was back in start of 2023, and it took a while. There it is. It took a while. It took a few months to go on a run, and the share price went to $4 and then pulled back. So that's why I have $4 as my first aim. And it may not work. That's the whole point. Maybe that's not the whole point, but taking a position like this doesn't always work. If you're successful most of the time, you will make significant profits. Even 50% of the time, if you are successful, you will make profits. I have heard some traders, some charters are only successful like 20 to 30% of the time, but their successful trades dwarf their unsuccessful ones in terms of percentage change. So they might take a lot of small losses, maybe 5% loss, 6% loss, but their gains could be 100%, 200%, 300%. And in that regard, they do make a profit, even though they have less successful trades. Lease. So this one has definitely popped up, and a few of you, maybe at least one of you, have paid it or have noticed that Lease is starting to look interesting. Not a high quality company. This is definitely not a company you would own for the long term, but the chart definitely looks more interesting. And I am almost at the point of calling this a breakout. We are at a 3 or 6 month high. The share price has rallied after their August results as well. My only gripe about Lease is just the company itself. I don't have any love for this company, but again, I need to divorce myself from those biases when I'm just thinking about technical analysis. This looks interesting. Lease. On the flip side, Alcidion does not look interesting. So this was an instance of a potential shift in trend and sentiment. I can see the share price trying to move into an uptrend during August, went to a high of 9 cents on the 21st of August. And it was definitely looking interesting. It had the hallmarks of a shift in trend and a shift in sentiment. And then it went to crap. We also had a moving average crossover on the 27th of August, which could have added to your interest. But at that point, the share price was pulling back. I'm not sure if the share price was pulling back because of financial results, but I think it's come to an end. Any sort of positive vibes about Alcidion has come to an end. The share price has, or the moving average has crossed back over. So that was a false break before that. And the share price has kept on falling. And now it's down to 5.4 cents. So this is now out of my interest. So I was interested in Alcidion, no longer interest. And I did have my buy, and now I'm getting rid of it. And I don't even need, I'm going to leave it in my video technical. Okay, on to gold. So I went through all the gold companies and I went, oh, what's an interesting one? There were quite a few interesting ones. I could have done Northern Star, maybe Ramelius. Either of my companies I own, Wrkr and West African Resources looks really good. So I decided on to grey. And the reason I decided on to grey is because there's a lot of chatter about de Grey on Ausbie's Wrkr over the last year. And a lot of people were saying, oh, de Grey is my pick of the gold companies. And I had a look at the chart whenever they said that and I went, no, not for me. Chart, no, it's actually in long-term downtrend, if anything. You could do that. Yeah, you could do that. And I had no interest until this week. Now, I mentioned a lot of companies had really high volume on Friday. I'd love to hear someone explain this. I think there's a logical explanation. Something to do with options, maybe. Maybe indexes or something. I don't know. Anyway, so what happened in the last week is we possibly have seen a breakout of de Grey out of this downtrend. We saw it possibly on the, not possibly, on the 18th. And then the next 2 days, share price rallied even further. I wouldn't be surprised to see the share price rally even further from here. So this could be a breakout when it comes to de Grey mining. The downtrend may have come to an end and maybe good times in store for this company. Now, the other thing I'd like to just point out, with the share price is at the highs the company saw back in March and April. So not quite a 6 month high, but getting close. And if the share price gets to say $1.40, I would be liking this even more than I am right now. So that's de Grey. And I just do like the volume, but I think there's some sort of explanation for Friday's session. Now, on the flip side, so a lot of these, I'm positive on one company, a little less positive on the next or the following company. And this is true for de Grey and Dimerix, completely different companies. I have traded Dimerix in the past. I'm no longer hold Dimerix. This was a trade. And then I did have a smaller position. No, I did trade, yeah. I bought back in as a trade and now I've sold out because it looked like, ooh, share price is trying to move into a downtrend. And on Friday, we saw a possible breakdown below a support level. That was 38 cents. Now it's fallen to 36 cents. Not high volume, but I like to see, or just wait to see if we do see a little bit of buying coming in on Monday or Tuesday, and so the share price could get above 38 cents. But chart is starting to look a little bit negative for Dimerix. You can actually put a bit of a downtrend right there. It's starting to actually, that downtrend, yeah, I think there's a downtrend there. So that's probably the line I would be focusing on, that downtrend. If it breaks that, I'd become interested again in Dimerix. So I have been positive about this company, well, the chart, not the company, the chart in the past, a little bit less positive now. In fact, maybe bearish, so negative. Megaport. I just thought I'd include Megaport because, awful. Look in that chart. And this was interesting because the day before they released their results on the 21st of August, share price rallied on that day. And I saw that rally and I was like, ooh, I think the results of Megaport are going to be good. This is loose lips, and the complete opposite happened. The results weren't good. Share price dropped on the day to release the results by 21%. The share price has kept on falling. This is sort of evidence to me that when you do see a negative announcement like this, it's a good time to possibly sell your position, maybe on the day or the next few days, because we have seen quite a few companies who release a negative announcement and the share price just keeps on falling. So we had Megaport here, Cochlear, Cochlear. It doesn't always happen, but possibly there is an argument that it is prudent when you see a negative reaction from the market like this, sell. Doesn't always work. In fact, I'll show you a case where it didn't work, but this is why maybe just wait a few days. Elders. So I made a mistake with Elders of selling when they released a negative announcement. Here it is on the 8th of April. Sold on that day. I should have just waited because the share price rallied. And yeah, so this is a case where maybe just waiting is prudent as well. So maybe that's the moral of the story. Just wait, because on the day, the market can fool you, can fool us. So that's Megaport. Unfortunately, looks fairly negative right now. But maybe, if we look at the weekly chart, or even the weekly chart looks negative. Yeah, there's a nice little support level at about $7. Yeah, anyway. And finally, Fenix. So I've just mentioned if Fenix gets to $24 or below $24, I would envisage taking a position. If the share price falls to 20 cents, no, did I say $24? If the share price falls below 24 cents, I could envisage taking a position in this company. If it falls to 20 cents, I'd be very keen. So we're not far off either of those levels. My main concern is iron ore chart. So iron ore falls further from here, you will see Fenix Resources fall further as well. But if iron ore starts to rally, probably see this company's share price starts to rally. I do like Fenix because of diversification. I do like that. And I could envisage this company be considered as cheap right now. Anyway, so I do have my eye on Fenix. We have seen a bit of a decrease in volume. So the market is becoming less interested in this company. You'd see nice volume as the share price went into an uptrend. Share price went all the way up to 44 cents. It's almost halved since then. So definitely Fenix Resources is on my radar, but I'm just concerned about iron ore prices as we speak right now. Okay, I think that's it for this video. Gone through all the individual companies' charts. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.